Fantastic. Actually, let me just start off with that. So the folks right before us here were saying, well, we're looking to the venture capitalists here to help us make decisions about what to buy. Who are you looking to? Where are you making these choices?
We're looking to the buyers to tell us what to buy, what to invest in.
Okay, so is this an infinite loop? Actually, so interesting that a number of you, I find it fascinating, marketers have been talking so much about content marketing, and almost each of you has incredible content marketing work that you guys have done. LUMA is, right? Content marketing, infographic gods. You had produced that great ebook. So do you find the way in which you're becoming ambassadors to this industry of helping people try and make sense of this, is that different than what you've seen in other markets, or is it just the internet, the communication just makes it easier to see?
Want me to start? So Brian Andersen with LUMA Partners. So I'm the odd man out here. LUMA Partners, we're an M&A advisory firm, so we help get the money out of the companies after they put it in.
They all love you.
We like Brian.
So a lot of people in the crowd are probably familiar with the LUMAscapes, which are industry landscapes for the areas that we cover. We focus exclusively on digital media and digital marketing. And so to your question on trying to make sense of these things, the whole reason we put those together, they're actually corporate development roadmaps. So it's pretty easy to see after a while where are the large strategic buyers already on there? What are the market trends that would make sense for them to then move into another area that's adjacent to those? So we spend our time, a lot of time with the big buyers of digital media, digital marketing, and use those landscapes for that purpose. And the information we provide is fueled by having literally hundreds of meetings a year with the private companies, the guys that these guys invest in, so that we understand what are the emerging trends in the space that are out there, who are the strong companies for the buyers to buy.
And Scott, just to answer your question, hi everyone, I'm Ajay from Bain Capital Ventures. In terms of where do we get our ideas around where to invest, for us it's really combining two different groups that we talk to. So one is all of you. You guys are a great source of interesting ideas, problems you're trying to solve, challenges you're trying to have, challenges that you're having and you want solved. And what we try and do is we marry that with technologists out of places like Google and Facebook and Twitter, folks that are on the cutting edge of using big data and machine learning, are leveraging the cloud, and certainly the volumes of data that those guys are dealing with are enormous. They're dealing with issues of known users and anonymous users. So, I think some of our most successful investments have been ex-Google founder, targeting a problem that we've heard from one of you, or ex-Facebook or ex-Twitter. And so that for us has been a great formula in terms of where we like to invest.
So when you guys look at the marketing technology landscape or the collection of LUMAscapes, you see all these companies, high level, what's your take on this? What is happening in this industry?
I think it's what you would expect in any very young industry. I think marketing technology is still very, very young. There were a couple of large outcomes 7-8 years ago with DoubleClick and Aquantive, but other than that, it's a relatively young industry with a bunch of very small companies in the grand scheme of things and a handful of companies that have broken out. And so I think as you would expect, there's thousands of players. Your LUMAscape, I think, has a couple of thousand. You do your own version of the LUMAscapes, they have a few thousand, maybe even more. And I think what we're seeing is people coming up with ideas. Very often I look at 30 or 40 companies that are all sort of saying the same thing, but kind of doing different things to start with. And so it's different starting points which will eventually converge. What I do believe this is a space that will have a dozen or more multi-billion-dollar companies. And so the question for someone doing a startup is, are you approaching it in a way that over time you can build a multi-billion-dollar revenue stream, which in turn is hopefully worth many times that.
So that's interesting because, given all those companies, obviously not all of them are going to become multi-billion, right? If it's dozen, that would be terrific. You guys have a pretty hard job though, right? You have to make these somewhat early decisions about which ones you think are going to be those multi-billion hits. How do you even go about thinking about that?
I can chime in on that. I mean, we've been pretty active in marketing tech for the last decade. Fortunately, we've had some good success around Omniture, Exact Target, Blue Kai, Neolane, Marketo, Bizarre Voice, and Sprinkler recently announced a big unicorn round yesterday. And honestly, it's I think it goes to what Ajay said. We do a lot of work with the buyers, and we try to figure out, is this market inflecting? Where are we on the S curve? Can we see our way to building a really large company here? And hopefully we can pick those companies well, and if we can get a decent batting average, we'll be okay. But there is such a tailwind in this market. I think what Ashu said, I look at it and say, if you take a step back, you say there's about $600 billion spent in media globally. And there's only maybe 150 billion spent in software, all types of software globally. So 4 times more media dollars in software, right? And as those dollars go digital, more and more dollars will flow into the enabling technologies that will drive better spend there. You know, there might be $5 billion in marketing tech. If you add up everything that we do today, I mean, that could easily be $40, $50 billion. You know, that's the opportunity that we're looking at. You know, if you look at $1 trillion of market cap in software is in the legacy client server model. That's all moving to SaaS. We're only 10% SaaS today. I think all of us believe it's going to be 80% SaaS at some point. So the dollars that we're talking about are so large. And I think this is the largest secular trend in all of software investing, marketing tech. You know, I think it's very early still.
So Brian, I know you and Terry, was reading you had gone through this exercise of looking at all the companies across your LUMAscapes and trying to make some hard decisions of who are even the candidates, you know, that we think could be significant in their valuation. Can you tell me a little bit about that process?
Yeah, so what Scott's referring to is just our own internal kind of planning. There's roughly 2,500 companies across all the LUMAscapes, and we said, you know, we only have so much time that we can spend with these companies, so which ones of these do we feel will have an outcome of $100 million or greater? And, you know, we came up with a list of 150. That's a pretty dramatic failure rate. We're defining, there'll be plenty of outcomes like in the whatever, 50 to 100 million, et cetera, that are going to be just fine. But as far as the ones that really have significant outcomes, it is a pretty small number. As far as, you know, the decision making going into it, it's all the factors that these guys would be looking at any time. I mean, it's you know, what is the market that they're attacking or the market segment they're attacking? How do we feel about their product? Since we talk to everybody, including the private companies, and we always ask them, who do you compete with? You know, who are you afraid of? The buyers, you know, as far as their views on, you know, where they need to fill in their portfolios, et cetera. The quality of the management team, et cetera. You know, all those factors kind of went into picking that 150 that's our prioritized list. We will meet with a lot more because, of course, there are smaller emerging companies coming up all the time, and we need to be able to identify which of those we want to spend time with as well.
Scott, to build on that, I mean, I think it's easy to get caught up in the ratios of what percentage will win and what percentage won't. But if you take, you know, Neeraj's broader point, I mean, marketers spend over $1 trillion today. They're going to spend $1.2 to $1.5 trillion 10 years from now. You take that number and think about how much money marketers spend. And marketing organizations will today spend 1% of that on software. And you and I have been talking about
yes, no, this is
I think marketing organizations will spend 10, 15% of that on software. So we're talking about hundreds of billions of dollars that will be spent on software every year over time by marketing teams. And so that's the scale of the opportunity. I mean, we did some research at Foundation Capital, and our research suggests that at a minimum, we're talking about $120 billion of software spent by marketers every year. So if you add that up, I mean, I think there's an opportunity for hundreds of very substantial companies, not all multi-billion-dollar companies.
Yeah, it's all about the distribution there too. And kind of one question I'd ask you is, right, I mean, you guys have a certain profile of what you're looking for. For the companies that don't fit that profile, you know, do you have any thoughts on their success ratio? Do you feel like it's almost a don't care? Is it challenging for you just simply from the noise of, what looks great, today and becomes a 10, 20, $30 million company, but doesn't make it into that next layer? I mean, I don't know, just given that distribution, sort of what do you think that landscape is going to look like over this, well, let's take your 10-year time period, Ashu.
I think the biggest opportunity today is the fact that the incumbents are very poorly positioned in this space. I mean, if you look at the marketing cloud for most incumbents, and I'm a little biased, I have to admit, I think it's a joke. There is no marketing cloud. It's all vaporware. And so I think there's an opportunity for lots of companies with different starting points to build very substantial businesses. The reality of startups is that a large number of them will not end up being large, public, enduring companies. That doesn't mean they're not successful. I mean, they could be acquired by one of those companies. They might get acquired by incumbents. One of the amazing things in marketing technology, is a lot of those companies do over time morph into becoming more agency-like businesses, which are great lifestyle businesses. And as entrepreneurs, you can make a lot of money doing that too.
Well, I mean, the traditional venture capital distribution, I don't think MarTech will be very different than that. You might see something like, out of 10 companies, maybe 5 won't make it. They'll eventually flame out. Maybe you'll get your money back on 2 to 3. You'll make like 3x on 1, right? There'll be the one company that generates a 10x plus. That distribution curve has been true for all sectors in technology investing forever, and I don't think that's going to change. But if you have 2,000 companies and we say 10% are going to make it, that's 200 companies that have real outcomes. We've calculated at Battery that there's been $20 billion of exits in marketing tech. 20 billion so far. My guess is when we're all said and done, it's going to be $100 billion of value creation. That's kind of the phase we're in right now. There's 80 billion more to come. We're probably year 20 of the commercial internet. This is a 50-year run for us.
Yeah, the thing I'll add to that is, if you look at the history of enterprise software, every function has produced at least 2 $10 billion companies or more. So sales, you've got Siebel and Salesforce, HR, PeopleSoft and Workday, manufacturing, SAP and Bain, and the list goes on. Supply chain, every category except for marketing. And the largest exit's been a couple $2 billion over the last few years. And I think the reason why that's changing, clearly all the themes you guys have talked about over the last couple of days, but to me the most exciting theme is the fact that the power of technology is finally being placed in the hands of the marketers. This has been a huge theme for us. It's behind investments like Optimizely, it's behind investments like Persado and Bloomreach, that the marketers now can make decisions, make changes, take actions without waiting for IT, without waiting 6 months, without waiting a year. You can react to the changes in consumer behavior. So I think this idea of democratizing the technology, putting it in the hands of marketers, adding machine learning so you're not stuck with a set of rules that are outdated 3 weeks into it. Those things to us, I think, represent massive opportunities in every facet of marketing, and I think we're just at the very beginning stages of it.
So one of the things I wonder about, taking a look at the landscape, the LUMAscapes, right? I mean, you find yourself, if you stare at it too long, asking very bizarre questions. But what are the dynamics that keep this at play? And one of the ones that I feel like is there, and I'm curious to get your perspective, is that the environment in which these systems are operating is not stable, right? The social media companies, right, they're continuing to change. I mean, what is Meerkat? What is that going to mean into all this sort of stuff? I mean, we can't even invent the things of, what will the Internet of Things do to these sorts of ecosystems? Who will be those players? And so I guess I'm wondering, I mean, how do you factor that into your decisions of who the winners are today in this current environment, but the fact that that environment could look very different in really just 2, 3, 4 years?
So one of the things we've done is we try to look for companies that have the potential to be broader platforms than individual features. Mm-hmm. So if you're a Twitter media buying tool, the odds that that's a long-term enduring business or a Meerkat media buying tool tomorrow, they'll be the next Meerkat, as you absolutely said. And so what we try to do is, and we talk about this a little bit in our white paper, is this notion of having major themes are what we call keys, and saying marketing organizations will buy buckets of technology. They need to solve a personalization problem, and they're going to buy a personalization platform. They need to solve an ROI problem. They're going to buy an ROI platform, and so on and so forth. They need to solve the media buying problem. And I think the trick is to try, and for us at least, is to find companies that have a broad-based view within that category. Now, by definition, these are somewhat arbitrary, and so these lines can be blurred, but we look for entrepreneurs that are thinking beyond that one feature to build a category-leading company.
Yeah, I mean, I think the way we think about this space, both the MarTech landscape and the LUMAscape, is we don't think of the world as one marketing cloud. In our view, there's really four that we focus on. One is B2B, and B2B has its own stack. One is commerce. One is B2C, non-commerce, and the last is ad tech. And I think and this notion of one space, I think, is really a misnomer. And I think when you think about these really as distinct categories, you realize that the nature of the technology needed to solve the problem for B2B CMO is very different than for a commerce CMO, and the stack is different, and the underlying issues are different. And so it's certainly in the interest of Salesforce and Adobe and everyone else to say, hey, we're all things to all of you, but the reality is very different. And when you sort of apply that lens to these landscapes, it becomes much simpler, and the vendors all of a sudden seem much more distinct than they do when you lump them all together.
Yeah, and like a lot of venture investors, they do theme-based investing, as you both mentioned. We actually look at it in a similar way, kind of theme-based M&A, or where where do we think the market's going? Where's going to be the really dynamic areas? And so, like last year at our conference, we talked about our 5 key themes of programmatic, mobile, native/content marketing, omni-channel, and convergent digital video and traditional TV. Each one of those actually has sub-elements. Like mobile, obviously, that's a huge area, but there's certain themes within mobile, that we really focus on. Or cross-channel, actually, some of you have portfolio companies in here that are really focused on being able to personalize the message, could be an ad, could be whatever it is, to each consumer at every touch point. And that's one of the areas that I find very interesting here in the whole marketing world is now with the advent of big data, overused term, but it's real, meaning you have the processing power to process massive data sets that can enable one-to-one personalization at the consumer level. There's a ton of innovation happening in that area right there.
What about you, Neeraj? What sort of disruption, how do you think about disruption proof to the degree that you can for these kinds of investments?
Look, I mean, part of it does come down to luck and riding these waves and getting in at the right time. And, there's always going to be disruption in all these markets. It's frankly a good thing for us. If there wasn't disruption, there wouldn't be an entry point for us either. So we're comfortable with the disruption. We're comfortable that it's our job to help build these category leaders and start from where they are and kind of build them into these platform businesses. This is it's a good secular trend. I think about it as marketing tech is actually a unique segment within all of enterprise software in my mind. And one of the unique aspects is this market really favors best of breed. And in all other software segments, there's actually a structural advantage to buy an integrated suite. You wouldn't go buy a general ledger system and an AP system from 2 different vendors. You wouldn't do that. It wouldn't make any sense. You need an integrated system. In marketing, you want to buy the best social system. You want to buy the best A/B testing. Why? That incremental conversion lift matters. It drives dollars, right? The more money you generate, the more you can spend on acquiring traffic. So this category, we talk about 2,000 vendors. The reason there's 2,000 vendors is most of these folks are innovating. They're coming up with a best-of-breed product in an area that's better than the other folks, and buyers have to buy it. So I'm a big believer that the marketing clouds, they're going to put stuff together, but ultimately, this category really favors best of breed, and it's going to be this way, I think, for a long period of time.
It's interesting. So it actually gets to another one of the themes of how I try and explain this landscape is you all have used this phrase platforms. That, platform good, feature bad. So the idea of platforms, to a certain degree, right, if we take a liberal definition of it, is they are these foundations upon which other things plug into and sit on, right? I mean, great platform ecosystems. Windows, right, the classic one. Now things with like Android and iPhone. And so I've been wondering the degree to which we would truly see those kinds of platforms emerge in this space. I mean, certainly a number of the cloud companies are making moves in this spot, but it still has a little bit of ways to go. So one of the things I wonder about that, though, is when you think of that crazy landscape, it does have a bit of a bifurcation there where, okay, there's clearly in a platform ecosystem, you want a relatively small number of platforms to win, but the very nature of having a small number of platforms is hopefully you get this explosion of these more specialized capabilities on top of it. I'm curious to the degree that you either agree or disagree with that, and if you do agree with it, is your job mostly about trying to figure out which ones are the platforms and invest in those, and for the ones that are just going to be the cool plugins on top of that, say, good luck, you're helping to make our platform more valuable?
I think it's very hard early on in the life of a company to definitively say this is or is not a platform at the level of abstraction that you would think of Windows as a platform. I think you start by saying, is this something that can be an enduring product that has enduring value over time and will endure over transitions in media types or media formats, as an example. Over time, as those companies build market-leading positions, their market-leading position in a product category allows them to build a platform. So I'm on the board of a company called TubeMogul. They started off as we called it a platform, but essentially it was a tool to buy video. And to buy video probably on just YouTube to start with, and then we kept adding different types of video formats. As you did that, then people wanted to buy data. We plugged in data vendors. We plugged in Blue Kai and others. We plugged in measurement vendors and so on. And so what started off as arguably a tool today is a platform through which you can buy the technology and data sets that probably 50 or 100 other vendors make available. But that's an evolution that happens over time. A priority, if you say, I'm going to build a platform that everyone else will plug into, the odds are you'll build a platform and no one else will plug into it.
Yeah, I mean, I think I agree with what Ashu said. I mean, I think it's hard to predict ahead of time what the platform opportunities are. But in our view, if we look at the landscape today, I think we see 3 or 4 interesting platform opportunities. I think one is the actual customer experience, managing that end-to-end customer experience, independent of channel, independent of device, and I think words like personalization fit in there. I think A/B testing fits in there. All of that fits into one piece of that. I think a second piece for us is content and thinking about content across, again, the entire customer lifecycle, and there are lots of interesting companies playing in that world. I think third is having that 360 view of the customer. Some people call that CRM, some people call that marketing automation. Again, I think it varies in B2B versus B2C. And then the last thing are the transactional engines that ultimately are really the place where this all comes together in the form of money that's being generated by the marketer. And so I think those, in our view, represent the interesting platform opportunities. I think to Scott's earlier point, we try not to look at channels. Channels are ephemeral. They change all the time. I think funding companies that are dependent on a channel, you're dependent on some large players that may, eliminate your ability to capture all the value. So we try and think about these platform opportunities as truly cross-channel or channel, agnostic.
So speaking of some of those other players out there in the bigger world beyond enterprise software, the internet companies, Google, Facebook, LinkedIn, their role in this, are they a threat to these companies? Are they a facilitator for these companies? I'm looking at you, Brian, actually, because partly I'd like to get your sense of the acquisition choices you've seen those companies make, and then also a bit of who the other potential acquisitors, the new ones coming into this space, are.
Yeah, so those companies, obviously Google has been very aggressive on the advertising side. So starting in 2000, I forget when it was, when they bought DoubleClick. That was the basis for their display advertising business. And they basically owned the ad servers, both the advertising side and the publisher side. And when the programmatic movement started, they actually really kicked it off when Google AdX 2.0 launched in 2009. That was the first time there was real-time bidded inventory, meaning display slots that you could buy in real time. That was the first time that inventory was available at scale. Then they quickly bought Invite Media for an advertiser side system, then AdMeld for a publisher side system. They had the exchange in the middle, and they filled in other capabilities as well, like Terracent for dynamic creative, et cetera. So they quickly filled out a really full stack, to address that, programmatic advertising trend, and they're the biggest and the leader there. Then you talked about Facebook. I mean, those guys they've been very aggressive lately. Just a couple years ago, all advertising was contained on Facebook using Facebook data. Now they're assembling a suite of offerings with LiveRail as a video advertising platform that they've expanded to be used, not just for video but for all ad formats. They bought Atlas from Microsoft for ad server. They have completely revamped that, and they're going, and so now they have publisher side, advertiser side. Is that sounding familiar? Mm-hmm. They just launched an exchange. They're going after Google in a big way. But neither one of them are really focused on enterprise SaaS marketing technologies.
Although there's Google Analytics, which somehow is maybe it's the odd bird, but
yeah, I was going to say. I mean, before LUMA, I was at Omniture and ran corporate development there, and obviously Google Analytics was a huge threat. I mean, they completely ate away the SMB part of our business very quickly. But the good news is that the enterprises still require a bit more robust and flexible tools. And I actually think Adobe's done a terrific job. They've been assembling other assets around their core analytics, all around the theme of data-driven marketing, that can leverage that core data set. So it makes Site Catalyst, the analytics, even stickier. So as far as in marketing tech, I don't view Google and Facebook as being big entrants here, but it obviously is the kind of four horsemen with the marketing clouds, with Adobe and Oracle and Salesforce, and IBM is a distant fourth. But then you have other marketing services and solutions companies. You have Newstar that bought one of Ashu's companies, Aggregate Knowledge. You have Experian. You have Nielsen. You have Alliance Data that they recently bought Conversant. So you have a whole set of companies that are out there. SAP bought Hybris right here, and then they bought CY, and which became the basis for their new marketing offering around personalization. So you have actually a very robust set of buyers, and that's, as M&A advisor, that makes us very excited. On the advertising side, there's even more. I mean, we sold a business last year to Singtel, Singapore Telecom. They've allocated $2 billion, they've said this publicly, to buy advertising companies. And they're executing on that. They're $750 million through that so far. And there are multiple other telcos. One of Brightcove's competitors, Yalla, was bought by Telstra, the Australian telco. So you have these buyers that a few years ago were not buyers in this space, that have really emerged in a big way. So again, it's very exciting for us as M&A advisors that it's such a robust buyer pool out there.
Scott, I want to pick on Brian's point around Google and Facebook in particular, not from an M&A standpoint, but I think they've both been, Google in particular has been a great catalyst for the entire, not just ad tech ecosystem, I would say marketing technology more broadly, and the notion of data-driven marketing. But they're also probably the biggest inhibitor to its overall growth, I would argue. Google's strategy, the strategy you articulated, I would argue, if I would be more cynical, they've chosen to play both prosecutor, judge, and jury.
Good work if you can get it.
If you can. And most marketing organizations and folks in this room and around the world have sort of allowed them to do that. And allowing Google, the fox into the henhouse is very dangerous. And what they have, I think, systematically been doing is making it harder and harder both for marketing organizations, but also for the entire ecosystem of marketing technology vendors to be able to play on the same level playing field with Google. And so one of the challenges, I think, is you can't ignore Google. They're such a major player in that ecosystem, but at the same time, but I think they sort of skirt the line around antitrust issues in this area, as closely as anyone I've seen. And it's a fine balance, and I think, I think it's incumbent upon all of us collectively to figure out how to deal with that. Facebook hasn't done that to that degree by any means, and time will tell how they evolve. And in the short term, I think Facebook's assembly of assets, both across the ad tech ecosystem, is actually a good sort of alternative view of the world to Google. You sort of need some balance of power.
Agreed.
But we are heading into a Cold War, and eventually sort of we need to get beyond that.
I think I'm responsible for going down this line of discussion. I mean, we could have a whole session just around the dynamics of Google and Facebook. And I do want to give the audience here a chance to ask you some questions directly as we're bringing up house lights and raise your hand so we can get the mic to you. I just want to, in a transition, ask you 30 seconds each. What do you think is one of the most interesting areas of new innovation in the marketing technology field right now?
The area that we've been most active on is this idea of how do you harness data at top of the funnel, folks who've not yet declared they're a buyer to you, but they are interested in buying your product. How do you find those people anywhere in the web? How do you make sure you deliver the right content to engage those people? And how do you get them into the funnel? I think the mid-funnel and down below, it's a lot of that's been played out. Top of the funnel that doesn't involve spending lots of media dollars, that's the place to go. I think it affects B2C folks, B2B folks. This is the single biggest problem that companies that are growing are facing today. And I think there's tremendous innovation happening there.
The area that I'm very excited by is just the impact that social is having on business transformation. 15 years ago, there used to be this person like the e-business czar. Remember that? There was the internet czar in the corner, talking about how the internet was going to change companies. And what I'm seeing is that, so there's like the impact that social is having on large enterprises is amazing. They have to respond now in minutes. They were never designed to figure out what to say, approve it, get legal to say yes, and send it out the door. They were talking about massive business transformation. I think it's fascinating that Accenture, you go through any airport now, and digital is the one that they're advertising. We all remember it was business process, BPO 15 years ago. And now it's Accenture Digital. I spent last night talking to someone at Deloitte's digital team. And so I think the digital transformation, I think social is really driving a big piece because it's the one that requires coordination in a way that we have never seen enterprises have to do before.
So even though there's a lot of social companies out there, you still feel there's opportunity for new and better ways to do it?
I think so. I mean, maybe if you add up Facebook, Twitter, all these guys, they might have created 100 billion of market cap, something like that. I don't know the exact, maybe 200 billion of market cap. Maybe that grows to 400 or 500 billion of market cap. I think the companies on the other side that are helping enterprises manage social, I think there's probably 50 to 100 billion of value creation in that segment.
Ashu?
So the area I'm most excited about is I think at the intersection of personalization and content management. And it's really the idea that if you're going to have customers have multiple channels of communication, multiple channels of interacting, and social has created infinite channels of communication for consumers with businesses. Organizations are having to create a marketing system of record, sort of the marketing equivalent of Salesforce. And that's not going to be one database because marketing has tens or hundreds of databases today. And so finding a meta system of record that allows you to connect the dots across all the elements of the consumer journey and then allows you to personalize the experience with ads or content, as the case might be, across that journey, I think is the huge opportunity.
Brian?
I actually like all the categories that these guys just mentioned. I mean, Ashu, I mentioned that kind of capability of predictive marketing, mass personalization, very related. And then before Omniture, I was at a company called Interwoven Web Content Management, and content management was really managing static pages initially. And we started to see in kind of the 2005-06 timeframe the first generation of the Optimizely kind of companies come out. We bought one called Optimost, of having dynamic websites. And that's now that there's so many more touch points and related to all this, including the personalization, is, okay, now how do you manage the content and make sure they get to each one of those channels? And so you're seeing a new age content management system emerge that's not website centric. So you have guys like NewsCred and Percolate, where they are becoming more of a central repository of content that can then be pushed out, out through social channels. It can be, on your own website, whatever it may be, and that's for your own content. And then obviously there's ads as well that can be coordinated. So there's a lot of exciting themes.
Great, thank you. We have a question. Yes.
Hi. Yeah, I've got a question for the panel regarding sort of acquisitions. Ad tech seems to have flourished in companies that have strong data sets, Facebook and Google, Facebook particularly buying Atlas. Do you think there's sort of the inflection point for marketing tech M&A would be one of these consumer companies buying into the space, like a LinkedIn or a Yahoo or a Microsoft, buying a platform and plugging in its data to help marketers use that data? Will that be a big inflection point? Like, I'm thinking of LinkedIn particularly, who basically own the B2B space. Could they buy a platform or marketing cloud that will help them sort of own that whole space?
Yeah, so LinkedIn, I think, is a great example. I mean, they bought Bizzo, which was focused on B2B advertising. That's really become the core of their marketing service, which is their fastest growing segment of their business right now. And where Google and Facebook are very advertising centric, LinkedIn obviously has a broader business as far as their offerings. So they're one that I do think, and Ajay mentioned, B2B as a very specific segment. It's true. I mean, if you're a B2B marketer, that's very different than, say, an e-commerce company in how you're marketing. So I do think LinkedIn in particular can definitely extend their B2B solution, and they have an amazing database of connections and qualifications, et cetera, that can be utilized for that. Facebook and Google, as I mentioned, they've been very acquisitive on the ad tech side. And you mentioned data. Yes, they have amazing data, and that's what they're utilizing, for that. But again, as far as if they're going to enter into the enterprise SaaS software marketing technology space, I don't know. I don't see it, at least yet.
Another question? There in the back.
So 2 questions. First one is, when you're evaluating, an investment opportunity, how much of Facebook's walled garden and Google's walled garden, with Facebook shutting off pretty much FBX, right? A lot of companies were building out models against that. How much is that influencing how you guys evaluate it? Second question, you guys are talking about all the dollars that are going into marketing stacks and ad tech stacks. As a media buyer, I have tons of guys trying to ping me with CPMs that drive down my operating, like what I can actually buy media for. CMOs are getting hit with 25% of their media budgets having to go to pay for all this. So when you're evaluating the pricing models for these guys, how is it important for you to say you can transition from a CPM to a true enterprise SaaS model? Like, where is that in your criteria set?
Well, to answer the first question I mentioned earlier, we try and avoid investments that are highly channel specific. And I think to the extent we do have companies that leverage Facebook or Google or otherwise, they have some core intellectual property that is really independent of those companies. And so I think for precisely the reason you mentioned, I think those individual companies, whether it's LinkedIn or Facebook or Google, they're continuing to improve their offerings and make their property more valuable. And at the end of the day, they could care less about what they view as middlemen between them and the marketers. They want to strengthen that relationship. So I think a lot of startups that are highly dependent on those platforms are going to get lost and get crushed over time. And so we intentionally try and avoid that is probably the short answer to your first question. I'll let one of these guys hit the second part of your question.
Well, I mean, the second part, around kind of the transactional model, we generally prefer SaaS models versus ad tech models, where you have some type of monthly recurring model to it. So we generally prefer that and encourage our companies to do that. If you think about how much money was lost, or spent with agencies at 15% of spend, if you get anything close to that on the software side, it's going to be a pretty large market. So we tend to invest, most of our companies are starting in that, so we don't have to worry about this transition.
So I've invested in a bunch of companies that do actually have more ad tech and more sort of IO-based models. And I think I don't think the line is black and white. I think the reality of media is that media gets bought in a bunch of different ways depending on the use case. I think what we look for is companies that can have SaaS-like business models, which means that if revenue is growing at 100%, cost of sales got to grow at 70%, not 120%. That's a problem if you're in the latter category. I think we look for businesses where the unit economics make sense and that you can demonstrate that you have a repeatable go-to-market model. And if the actual pricing isn't based on media or the other way around, I think those issues are workable. But the reality is most media-based models don't actually have scalable business models and don't have good unit economics. And those are obviously, when you put it that way, not such good businesses.